All right, all right, all right. Good morning, everybody. It's Hammer. Today is Monday, November 24th, 2025. I, of course, am Hammer, the founder of Originator Success, Grab and Go Social, and Rate Sensei. All great products to help my originator and mortgage broker friends get loans from Google, AI search, and social media. Be sure to check those out as you're going into 2026. I'm telling you, got to have good products to get you loans. So anyway, go check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, as Hammer goes live, talking about what's going on with mortgage markets, rates, pricing, all that good stuff. If you're here this morning, say good morning. If you're watching on the replay, don't forget, give me hashtag replay in the comments. Let me know that you were here. I know not everybody can make it live. However, the show is best consumed live. And if you want a reminder that I'm going live, I do send out a text message. You can sign up for that at hmmr.io/reminder, or like on Friday, when my plane got all screwed up and I ended up in the air and I couldn't go live and I hadn't recorded, I sent out a text message warning everybody that I had gone dark. So it doesn't happen often, but when it did happen, that's how you make sure you know. So hmmr.io/reminder. If you're on your phone, you can also use this cool QR code. If you are on your phone, take a screenshot, go back to your photos, press and hold it. I know it works on Apple, probably the same on Android. Press and hold it. It'll come up with the link as well. So if you're here this morning, say good morning. I'd like to say hi to all of my live folk friends who are here this morning. Mr. Ron Siegel says today is National Sardines Day. I'm offended right off the bat. Who likes sardines? I think they're gross. Ron says he only eats them on a quality Caesar salad. You're not getting me to eat those damn things ever. Let me know in the comments who likes sardines. I'm not a sardine guy. It's not for me. Good morning, Mallory Fodiatis. Good morning, Amber Moser. Good morning, Holly Johnson, Mike Brown. Of course, the legendary Ron Siegel, Vicky McSweeney. Good morning, Jerry Avila, Kyle Mazikas, Will Patterson. Great to have you here. Tim Klyla, good morning, my man. Tim, I'm back in the office for a couple of days. If you do need me, just let Danielle know. Karen Lynn Whitaker Eldridge. That's the award for the most names. Good morning, Karen. Tim, you love them. Ew, dude, Tim, you love sardines? I'm with Avila. Avila says, no, thank you. No gracias. Will Patterson loves them too. Really? I'm not a fish guy, though. I'm not a fish guy. Deb Dickinson, good morning. Yeah, I'm with Jerry. Sardines are bait. Yeah, exactly. Good morning, Randy Teakle. Randy, do you like sardines? That's the question of the day that we're talking about, since Mr. Siegel says today is National Sardines Day. Why we would have such a thing, I don't know. So anyway, that's all been fun, y'all. Good morning, Yasmin. Let's get into the good stuff here. Let me hop in and all right. So quick recap. Friday was a good day for rate sheets. You should have seen a little bit of improvement Friday over Thursday, and rate sheets ended mortgage bonds ended the day a little bit better on Friday than they did when pricing came out. Let me go ahead and show you the screens. We'll zoom in on this fun stuff here now that I am back at my desk, and it's the iPad thing worked out pretty good, though. So actually, let me put this on 2-day real quick. All right, so take a look here. You'll see pricing came out right around 10 a.m. It was right around, let's see, it was right around 100.98, 101. Let's call this 101. And it ended the day at 101.02. So it was up a couple of basis points. Ended the day a little bit better than when pricing came out. Nothing that you were going to see any reprices better on, though. However, rate sheets today, you can see that we are higher right now as rate sheets are getting ready to come out. Lenders should start coming out with pricing over the next half an hour. And that is, of course, higher than where we were on Friday as rate sheets came out. We are moving up in the world. Remember, up for mortgage bonds, a good thing. We're going to go ahead and draw our little happy smiley face. We are celebrating this morning. This basically means rate sheets are going to be a little bit better on the day, but nothing crazy. If we take a look at Mortgage News Daily, use this as a reference point. I mean, you're looking, we've gotten from 6.38. They moved down a little bit, 6.36. They hovered there, then 6.34. This morning, you'd be at like maybe 6.32, right? So this is equivalent to kind of the best pricing that we've seen since earlier in November. But I mean, look at this. It just rates have been so solid, right around 6.25 to 6 3/8. We've really just seen rates hold steady through almost the whole month. Remember, right over here, this was I'll do it in red because it was actually bad for us. This was the Fed meeting on the 29th, and that was the day that the rate sheets died. So the day before, 6.13, and then we kind of went up into 6.33. And I mean, look, we just have not seen any movement since then. Things have been really, really, really solid here. So rate sheets today going to be about the same as we saw, like last week, a couple weeks ago. I mean, you're just talking small differences. As far as what we got on the economic calendar for today, we've got nothing, zero, zilch, bupkis. I had to Google that one because I always thought it was bub, B-U-B. It's bupkis. I don't know the origin of the word bupkis. Anyone else have a word for zero? Randy said, I'm a fan of good sardines, not all though. I'm with Angela. Angela's no with the sardines. Yeah, and Ron said, I messed up. It's not sardines on salad, it's anchovies. Dump the sardines. Sardines are bait. I'm with Avila. Anchovies are gross. They're dirty, salty things. But sardines are even grosser. Good morning, Brandy. You didn't miss much. We're just talking about today is National Sardines Day, and if you like sardines. Is that a Texas thing? Do y'all put sardines in your chili? Since you silly people don't put beans in your chili, beans go in chili. Anyway, taking a look at where we're at this morning, there is nothing on today's economic calendar, of course. It's going to be a quiet week. We got the holiday coming up. You've got Thursday is Happy Thanksgiving, and Friday is Happy Shopping Day. And actually just everyone takes the weekend off. So let me tell you a quick story. I remember back in the day getting a loan application on Wednesday afternoon and having it closed on Monday, the Thanksgiving weekend. That was pretty damn cool. I don't think you could do that today with TRID and everything else, of course, but I got an appraisal out on Friday, got an appraisal done and back. I had the loan underwritten and closed on Monday. Saved a deal. That was when I loved writing loans. That was the good old days, the cowboy days of writing loans. So anyway, reprice risk on the day today is low. It's not likely we're going to see much movement. There's a big change though. Let's talk about why we're seeing what we're seeing. So first, let me give you the lock advice and then we'll go back to this other stuff. So lock advice, the door is absolutely open now for cautiously floating. I've been locking because we haven't seen any real moves like I showed you before. Let me put it on the screen and we'll kind of do a side by side here. Hold on a minute. Let me move this. Here we go. Let me bump this over. Let's get rid of this back window there. Slide this over. Bear with me. I just got to size this window up. Move it over a little bit. All right. So that's close enough. So hold on. I'm trying to size the bottom. All right. So taking a look here, we really, I'll use mortgage bonds to show you what we got going on here. So looking at mortgage bonds, we've been in a locking stance because we have seen after the Fed meeting, and this was the Fed meeting right here, the big red and negative candlestick. Remember, when we look at mortgage-backed security, Japanese candlesticks, the red means we went down on the day and we don't want to go down. Down is bad for rates, bad for pricing. Since then, the day before the Fed, we were up here and we came all the way down to here before Friday. So as of last Thursday, this was the move down that we had seen, right? And certainly not what we want to see for rate sheets. And we saw that as we took a look at rate sheets. You saw going from 613 right here. This was right before the Fed meeting, and that was our best pricing. And then within a couple of days, so actually we're at 613. And then in a couple of days, then we were back up to just an eighth of a point, or a quarter point, even if you want to say the full movement. We went from 6 1/8 to 6 3. So we jumped a quarter point after the Fed meeting. And since the end of October and that Fed meeting, rates have been extremely stable, as we've talked about. 6.33, all going up maybe to 6.38. I think is the highest point here. So we've seen that. So the advice now, we've been locking through a lot of that because there just hasn't been room for improvement. But what we're starting to see now is you've got 3 days. You got Friday. Here's Friday. I'm sorry. You got Thursday, Friday, and today. So forgive me. My days from last week were all messed up. So you got Thursday, Friday, and today, 3 days of improvement. We've got a nice bounce from this low point last Wednesday up to where we're at right now. And that's why on Friday I didn't send out lock advice and I didn't get to do anything, but I would have been cautiously floating on Friday. Today we're cautiously floating. We're also, take a look at these technicals. So I'll switch over to yellow. Do you see this red line right here? This is the 50-day moving average. Now, when we look at these moving averages, when you're looking at the technicals, do you see how here it acted as a support level? It was what we call a floor of support. So mortgage bonds were kind of hanging out above that red line right there. Then for the last couple of weeks, we've been below this red line. Friday, we tested that line. See right here? So this particular candlestick, what happens here, the body of the candlestick is where we started the day, right here. And the fat part, that's the body. And we ended the day right here. The wick, this little tiny piece up here, this wick means that was the highest the bonds were for the day. And the tail down at the bottom was the lowest they were at the day. So they tried to break above this moving average, but couldn't do it. Ended the day right at the 50-day moving average. Now, this morning, we started the day, we opened at 100.99, and we're up 10 basis points right now. We're up, whatever. It says 8 basis points here. So if we started at 100.99 and we're at 101.10, that's actually 11 basis points. I don't know why that would. Let me refresh it and see. But anyway, so we're up about 10 basis points this morning, we'll call it. And we are above this red line. Now, we want to see if bonds, mortgage-backed securities close above this line. Now, it's not the end-all, do-all. However, on a week like now where we have no economic data, this is a big deal. It'll help bonds to continue to drift higher. Now, we've also seen the 10-year Treasury yield really come down. Now, remember, for the 10-year, we want to see that happen. We want to see the 10-year come down on the day. That's actually good. So, yes, Eagle, I'll touch on that. That's a good point. So take a look here. When we look at the 10-year Treasury yield, we want this to go down. Down is actually gives us a smiley face. Okay, so we want to see that 10-year Treasury yield go down. This is actually a resistance level because we are above it. And as of Friday, it broke below that 50-day moving average. And today is below that 50-day moving average right here. Now, why have we seen such a big move? A lot of it has to do with this guy right here. Just cute, lovable, smiley Fed John Williams. So this is New York Fed President John Williams. The New York Fed is the most powerful Fed president. It's the only Fed president that gets a permanent voting position on the Federal Open Market Committee, the FOMC. So John Williams, you don't usually hear a lot about John Williams. He is the New York Fed president, though. He is also the assistant chair. So the Fed chair is Jerome Powell. He is the assistant chair. And he came out and basically, said, hey, a speech Friday from the current New York Fed leader, John Williams, mattered so much to markets. Yeah. Okay. Yeah. Oh, I'm sorry. He's not vice chair. Vice chair is Philip Jefferson. So that's, I take that back. He's not the assistant chair or vice chair. That's Philip Jefferson. But Williams is New York. So Jefferson also the other day gave us a little bit of a bump. So when Williams gave a nod, the likelihood of a further adjustment in the near term for interest rates, investors took it as a message from on high that the leadership is inclined for at least one more rate cut sometime soon, likely at the December meeting. And we've seen that. Look at the Fed futures that went absolutely nuts. Now, if you remember, just the other day, Fed futures were down. This was down to about 40%. It was actually below 40%. We are back now, almost double the probability of a Fed rate cut, up to about 80% expectation of a December rate cut. That's one of the reasons why I am in a cautiously floating stance, is that it opens the door for bonds to improve a little bit further. Not huge, but a little bit. And it does put some support to kind of keep this 10-year where it's at and not see it push back up over 410. If we were to see this 10-year push back up to 410, I would go back into a locking position. But as long as we're watching it stay down here in the low fours, that's a good sign. Now, as Mr. Siegel pointed out, he said that during the week of a holiday like this, generally you're going to have lower trading volume. And that means we could have higher volatility as bond prices jump around a little bit. I'm not too worried about that, though. I actually think we will see more flights to safety because of the recent stock market volatility. And I think we will see money parked in bonds. And generally, you're going to see money parked in bonds over the holiday anyway. And I think we'll see that even a little bit more this year. And that's going to support that we won't see bonds lose ground. And you'll see the mortgage-backed securities kind of hold steady and improve. You'll also see the 10-year treasury improve a little bit. That yield will stay low or actually get a little lower. I don't think we have any threat of breaking 4 in a serious way. You're not going to see too much improvement. Now, we're cautiously floating, but it doesn't mean that rates sheets are likely to improve much. And if you like it, lock it is not a bad philosophy, especially for something closing near term. However, with the holiday, you lose Thursday, you lose Friday, you lose Saturday and Sunday. You lose a lot of days. So if you need a little bit of time on your window, floating anything right now is not a high risk. Keep that in mind. But there is some risk to that. So just be aware of that and kind of go accordingly. Randy says, what's the next shoe that might drop to move rates? Thank you for the softball, sir. Let's go over and talk about what we got now. On Wednesday, we're going to have a lot of economic data coming up on Wednesday. All right, hold on. Let me just adjust this so that we can. Nope, I don't want that. I want this. I want the economic calendar. Let me make this a little bit smaller. Okay, so taking a look at the economic calendar. Again, we have nothing going on today. Nothing that we have at all today, right? Here, I'm going to slide this so you get. All right. So, however, this week, tomorrow, you've got the ADP employment change. You know what? I don't remember hearing too much about that one. You got core producer prices. I would like to core producer prices. I don't even know. I don't. So, according to Mortgage News Daily, there's a few. See the yellow star? That means these are big deals. So we have retail sales tomorrow, it says, which we've already seen that people are spending money. U.S. retail sales are proving resilient while risks mount. This is on the 22nd. Retail sales growth is likely to have moderated in September. But we'll see. We'll see where that goes. So that's part of it. As far as what else we would have. So on Wednesday, we would have the PCE. The PCE is personal consumption expenditure. That is the inflation index that the Fed watches. However, I don't know that we're going to have that. And let me find it. So the PCE comes from the Bureau of Economic, the BEA. Hold on a minute. Let me adjust this. Okay. So Bureau of Economic Analysis. Okay. So this is from the Bureau of Economic Analysis. And when we look here, it says current release, September 26th, 2025. And that was August's data. Next release to be rescheduled. So I don't see it on their website that it's coming out. Ron, do you know anything? I know you follow up on this. Anyone else that might know, please let me know as well. But it says to be rescheduled. So I don't know that we're going to see that data. This would be the September data. So it was collected. It wasn't like it was during the government shutdown, like the October data that we may not have. So I would think that this would be normally coming out this week. It would be coming out like we saw. Where's that? Oh, I don't have the economic calendar. All right. Well, would have come out on Wednesday. I don't know that we're going to see it on Wednesday, though, because of this. So, but if we do, that would be something that they'll kind of use. Otherwise, we're pushing off until next week, and we're not going to get jobs data next week. Now, I have been inaccurate. I've wrongly said that we were going to get jobs data, BLS jobs data dates. And let me show you this. Yes, there's a lot of government shutdown latency effects. So Randy said, are there any government shutdown latency effects? Yes, there are. Ron pointed out ADP weekly tomorrow could be more meaningful than normal since we're not getting jobs reports for another few weeks. And that's where that latency is. So if we take a look here at the BLS data dates here, I would have expected that we would have gotten the December 5th report before the Fed meeting. However, look at the date here, December 16th. So the next time that we get information is going to be December 16th. And that's for the employment situation. Remember, we just got some on the 20th, right? Last week on Thursday, we got a report. And the next one, which would have been the 5th, is instead pushed back to the 16th. The Fed meeting is on the 10th, as you see right here. So that's not going to have a big effect. So we're going to get that afterwards. And that's why, as Ron says, the ADP weekly, I didn't even know that we followed a weekly. Tomorrow would be more meaningful than normal. So we'll see. As Ron pointed out, geopolitics can move rates at any time. The China-Japan feud could move rates if that escalates in a meaningful way. You've also got talk of what's going on in Ukraine and the huge like you didn't know that money was was corrupt. Like you didn't know Ukraine was corrupt and we're pumping hundreds and hundreds of millions of dollars into the country that some of it wasn't going to be funneled in the wrong places. I think we'd give them billions, right? So between us and Europe, so big drama going on over in Ukraine, but I don't think that'll affect anything like Ron is saying, but we will definitely could see that. So Ron said Powell will still fight the rate cut. He hates Trump, can't figure out economics unless it's fed to him in reports from the BLS. Ouch. Look at the hating on my fanboy man, Powell. Ooh, Siegel. I don't know. I think he will fight the rate cut, and I think he should fight the rate cut. We're definitely seeing an employment issue. There absolutely is an employment issue. There's no arguing that there is. Here's a good article from the editorial board over at Wall Street Journal, and they talk about it. They talk about how, unemployment went up. The report on Thursday last week, 4.4%. 119,000 jobs created, but we know that there was revisions lower on the previous ones. And the main thing is look at where those jobs came in. Job growth was in healthcare and social assistance, leisure and hospitality, government, still government jobs, right? And construction. So employment declined in transportation and warehousing, professional and business services, and manufacturing. A lot of down on that. So, and this article goes on to talk about how businesses also, the numbers could be low because they can't find people to work. And the biggest complaint is labor quality is the most important problem increased over the last year. Labor quality, meaning, you can find people to fill a job. You just can't find the right people with the right knowledge and or work ethic, ability, everything else. The quality of the people is not there for these jobs. So this is all a big deal. But anyway, wow, 24 minutes. I was trying to get these things show lower or shorter, and here I am, the rambling, gambling man. So anyway, that's what we got going on, my friends. Thank you so much for joining me. Tomorrow we will see, but there's not going to be much of a change. Things should be quiet again as we head into the holiday. I'm not expecting much of a move. If you want to buy a few days on your rate locks, it's certainly not a bad move to float. I'm not expecting any big improvement in rate sheets, though. We could see a little improvement, a little bit of better rebate pricing. And a little bit's better than no bit, but I'm not expecting rates to drop. Ron said we don't really send money to Ukraine. We approve spending. Yep. I know. But Europe, there's been a lot of money sent as well. How about them Cowboys? They did come back and beat the Eagles, Jerry. So, which I was in a conundrum. I was really struggling. We're talking football for anyone that wants to stick around for another minute. I was struggling because, as a New York Giants fan, and I'm still a fan, who I couldn't figure out who I don't like more, the Eagles or Dallas. However, I'm going with the Eagles that I don't like more on this one. So I'm glad Dallas did beat them. However, the Giants losing to the Lions, I was glad to see the Lions win because I have Michigan roots, but hello, the Giants blowing it again. And why did they not go for the field goal when they were right there on the goal line? 4th and goal, and they went for it when they were up by 3. Should have taken the 3 points, would have forced them to go for a touchdown, could have had a better shot of stopping the game right there. Terrible play. Really was. Just can't, do it. The Chiefs did come back to win too, didn't they? They came back to beat who were the Chiefs playing? Oh crap. I can't remember who the Chiefs were playing. Oh, the Indy. Indianapolis was up most of that game and the Chiefs came back to win that, didn't they? Tim said, as a Lions fan, that was an ugly game. Dude, it really was. Come on, man. The Lions should have been smacking it down. And but Jameis Winston was fun to watch in that game. He was rifling that thing around, slinging that thing. Ron said, as a Rams fan, happy to see the Cowboys win. How many times can the Giants shoot themselves in the foot? A lot. It has been, sometimes you have to wonder if they were doing it on purpose to get the better draft pick. Man, I'll tell you, it is absolutely. So I'm enjoying football this year. In fact, tonight, the Niners and the Panthers, you know what? Maybe I'll challenge Frazier to some kind of a bet on Facebook. You all know Jason Frazier. He's a big Niners fan. So, yeah, Big Dan said tough year for Giants fans. It is. I don't think Scatabo is going to be long for the league, but he was fun to watch. He's got the same injury that I did, by the way, where he broke his fibula and tore up his ankle. That's the same thing I did. And I will tell you, it takes a while to come back from, and I still feel it. The doctor told me it takes 2 years to fully come back from that injury. And I've broken a lot of bones. That's not pretty. So I don't know how severely he broke it. But if it's like me, you can work on it. You could do things, but I still feel it, man. I still feel it. And I wouldn't want guys chopping at my legs. I'll tell you that. I don't envy them. So we need an Originator Success Fantasy Football League next year. Yeah, it would probably get me more into it. I don't do fantasy football anymore. Maybe we'll do that. So, you were at the Giants Broncos game. Yeah. I'm sure that was terrible watching them lose to that one. So, all right, y'all, we got to get to work. You get to work. I'll get to work. I'll see you guys tomorrow. Take care, everybody. Make it a fantastic one. Appreciate you. Bye-bye.